Senator Tillis.
Thank you, Mr. Chair. Thank you all for being here. I want to start maybe with a question that I think Vice Chair Barr, you answered Senator Warren, saying that you thought banks over $100 billion should have additional prudential requirements. Did I hear that correctly?
I think it's important for us to strengthen capital and liquidity requirements for large banks, really up the spectrum.
Is there any of the tools, just going back, Mr. Chair, I'd like, without objection, to submit this to the record. This is the regulatory regimen that applies to banks of certain categories. And so I'm curious. I always worry about when we create an arbitrary asset limit for doing something, because it was the activities of Silicon Valley that got them in trouble. And so I just want to ask briefly, I got a lot of questions and I will get them done on time. You've mentioned a couple of times, Vice Chair Barr, that the 2019, I guess, implementation of Senate Bill 2155, I'm inferring that, bucketed Silicon Valley in a certain regulatory regimen. Did that mean that it restricted it from having supervisors make the judgment that the increased prudential regulations or supervisory functions could not occur?
Senator, we're bound by the rules we put out. So if we want a new framework, we need to change.
2019, different administration, predates your tenure. Are you saying that the promulgation and the implementation of 2155 took certain supervisory or regulatory regimens off the table for Silicon Valley Bank?
The Federal Reserve's implementation in 2019 set basically the standard for how that firm would apply.
Yep.
I think that regulators, supervisors do have judgment,
that's
and they
my point.
Can put in place mitigating
That's my point,
matters.
because when I hear bucketing, I think about ring fencing, and I wonder if that meant that a supervisor, that in my opinion, if you take a look at the matters requiring immediate attention and immediate attention, do you know yet, I know we'll get the report in May, but do you know yet how many of those MRAs were followed by an MRI? In other words, the 6 that were issued over the course of a year and a half or 2 years, how many of them was an escalation of the matter requiring attention to immediate attention, if any? And if you don't know that, you can submit it, actually, if you will, just submit it for the record. Look, we've got a CEO of Silicon Valley Bank that is a Class A member of the board of the San Francisco Federal Reserve, who got summarily terminated on the day of the bank's collapse. In your review, will we also have insight into California's role in regulating this bank, or will this be purely federal jurisdiction?
We're looking only at the Federal Reserve. The state of California is initiating its own review.
Well, I think that's going to be very helpful, because in my opinion, I agree with former Fed Torrillo that he sees this as a regulatory lapse. Torrillo was never complimentary of Senate Bill 2155. He was implementing Dodd-Frank when we were doing it. He was hammering it. He's made the statement, and Mr. Chair, I'd also like to submit for the record an article interview with Mr. Torrillo from Marketplace that he specifically says in here, 2155 is likely or impossible to be a root cause of the problem. I'm paraphrasing. He was saying it looks like a regulatory and supervisory lapse. And I think we're going to find that lapse it is not only with the Fed, but more likely even the supervision that the state of California
Without objection, so ordered.
Was involved in. So I'm also kind of curious in the report, are we going to see any movement? And I'm not a conspiracy theorist, but there is one question of, did we have a level of comfort with this bank among some of the supervisors? Do we know or have any insight over the past few years if anybody who had worked for the Fed works for this bank? We know that the CEO was on the Fed board, but are on a board at the Fed.
Senator, just with respect to the Class A directors that you mentioned, Class A directors are prohibited from participating in any way in supervision.
Yeah. Oh, no, I get that. But it's just people in proximity, maybe people call them balls and strikes. The supervisors didn't get that quite right. But I think that there are some people who, and I want to find the root cause of the problem. And I think that you all will find a lot of information when you issue your report. I don't think that we're doing the banking industry any service going forward if we talk about now we just got to rein in the small banks. We've got to increase by default, regardless of the activities of the bank. We've got to increase by default their prudential requirements and with your holistic review, capital requirements, a number of other things. When you have a run on a bank like you did with Silicon Valley, could any bank possibly have enough to cover the run? Any bank.
Senator, the particular bank in question is quite unique in its structure, its liability approach, and its interest rate risk management. I can just speak to that particular bank. That particular bank had.
If you look at their bank, if you looked at their internal liquidity stress testing, if you took a look at their contracts on an interest rate exposure, this does not take a highly sophisticated person to understand the risk, and it damn sure had to be known months before the chickens came home to roost. And I wish that we could just focus on that problem and not use the red herring of some lapse in regulatory oversight that was the root cause of this bank collapse. It simply was not, and I'd love to find anybody to prove it wrong. I don't care how you feel about regulatory tailoring, but use a valid argument to fight against it. Do not use Silicon Valley Bank as an example. Not suggesting that you have, but there are many people that sit up here who have, at the expense of looking at how we can prevent this in the future. And I do have questions for the record that I'll submit. Thank you all.
Thank you, Senator Tillis. Thanks, all of the three of you, for your testimony, your public service. I look forward to the reviews on these bank failures, and thank you for